QuickBooks Online 2025 Sales by Customer and Income by Customer Reports. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are online in our browser searching for that QuickBooks Online test drive, the free sample company file available to everybody. Looking for the result that has intuit.com in the URL, giving us some assurance because Intuit is the owner of QuickBooks. We're choosing the United States version of the software, and we're going to tell it that we are not a robot, so it lets us in the door. Otherwise, it shuts it in our robot face, breaking our antenna in a very rude fashion. So we don't want that to happen. So we're going to go back in. We're in the sample company file, Craig's Design and Landscaping Services, opening up the major financial statement reports as we do every time. The reports, they're on the left. We're going to be in the standard tab, in the favorites, right click in the balance sheet. We want to open that in a new tab. Same with the profit and loss, right click to open a link in a new tab. Tabbing to the middle, closing up the hamburger, and then we'll put the range frame change 010124 to 123125. That's what we've been doing lately. We're going to keep with that. Drop down to see it in years, run it to refresh it. Run it to refresh it, 2024, 2025, side by side. Run that bath so you can refresh yourself. Closing up the hamburger, and then we're gonna go 010124 tab, 123125 tab, selecting the drop down and seeing it in years, and then we're gonna run to refresh again. We're running to refresh. Possibly we are running something refreshing like I don't know, some music. We're running the jukebox to refresh our mind and body. That's why it's so. We have 2024 and 2025 side by side. We're now going to be looking at some other reports other than these major two financial statement reports. Most other reports giving more information about one or multiple line items of these two major financial statement reports. This time we want more information about an income statement or profit and loss type of report, and that's going to be related to the income accounts, and it's going to give us the income by customer and income by item. So let's do a quick recap of the income statement and how the income is put on the books, remembering that the income statement is our timing statement, meaning you can equate it or have an analogy of, for example, driving a car and seeing how far you're going to go within a day, within a 24-hour time period. One way you can measure that is to reset the odometer starting at 0 at the beginning of the day and see how far you drive, and the next day reset the odometer and see how far you drive that day. Similarly, here the income statement gets closed out to the balance sheet. We can think of it typically on a monthly basis or quarterly basis. Most likely we think of it on a yearly type of basis. Now, when we record income, we typically think of it on an accrual basis, which could be the same as a cash basis for certain industries because there's no difference between when we get the cash and when we earned the revenue. So gig work would be the simplest kind of situation. Someone just pays you and they put it right into your bank account from, say, you're a YouTuber or something like that. And then you just get the money, possibly then recording it with a deposit type of form. And then we can possibly use the bank feeds to record that information. In that case, we would be getting paid at the same point in time we did the work. Or you could be at a cash register, in which case you're still getting paid at the same point in time you're doing the work, but you might be recording it with a sales receipt instead of a deposit form, and therefore still have the capacity possibly to enter customers as you do so, and most likely will also be entering items as you do so. And then the more complex or the most complex system is where you have to track accounts receivable, and that's when you're going to be invoicing clients. So that means when you record income, it's either when you receive the cash with a deposit form or sales receipt form, or when you did the work but have not yet received the cash, that being in an invoice type of situation. So if we look at the forms then, if I hit the forms drop down, we can record revenue either with a deposit form, although QuickBooks is not specifically designed as much to use a deposit form, or we can use an invoice form if it was an accrual basis, or a sales receipt form if we're at a cash register type of situation. So the next thing that people end up wanting to do is record their income by customer or by item. You want to be careful of not doing that usually. So for example, if you're invoicing clients, you might be tempted to set up inventories that are going to set up the income accounts or items to go to particular accounts, possibly by customer. But you don't really want to do that because then you could end up with a whole lot of income accounts on your income statement. And so that will clutter up the income statement, number one. And number two, depending on how we record things, you could have that information on the subledger report. Therefore, you don't need it on the income statement. So we generally would like to not record a separate income account by customer and instead record just one or fewer income statement accounts and get the detail by customer, possibly in subledger reports. Now, there is an exception to that, and that would be like in a gig work situation. Let's say you get paid by like 5 platforms or something because you work for different platforms. Then those platforms are kind of like your customers, and you might be recording it with bank feeds, which basically means you're going to use a deposit form. The deposit form doesn't have the same kind of connection to the customer center as the other 2 sales forms, the invoices and sales receipts. Therefore, you may not have the added detail of the subledger reports if you're recording your income with deposit forms as you would do through the bank feeds. And therefore, you might want to set up your income accounts by customer. You might say something like, this is the platform name, in essence, the customer name, income account, right? This is AdSense income account. This is whatever platform income account, and so on and so forth. So that's kind of the exception to the rule. But if you're using invoice forms and sales receipts in your data input, you at least have the capacity to enter the customers. Now, also note though, if you have sales receipts, you're at like a cash register, you might be gathering the customer information. You have the capacity to gather customer information, but you might not do it because a lot of people don't want to give you their information. If I'm ordering food at a restaurant, I don't typically want to give my contact information to like the McDonald's server or something like that. I don't really trust that to be the case. Just give me my burger, please. I'm here. I'd like to be somewhat anonymous with regards, because I don't want them selling my information right to any kind of advertisers. I've got enough of that going on already. So if you're at a cash register, you might not be able to generate reports by customer because you might just simply be using the same customer for all sales receipts, just a generic, basically, customer. If, of course, you have invoices, tracking the customers becomes very important. And often when you're in a business that deals with accounts receivable, then you deal with repeat customers, such as a law firm or CPA firm. That's when it's going to be very important for us to get a more personal relationship with our customers, typically, because we want to build a relationship that's going to be beneficial perpetually over a long period of time. And so that's when most likely we can generate reports that will give us the income by customers when we're invoicing. Now, the other report is by item, which we'll talk about possibly later. But the other thing I just want to touch on is it's possible that we feel like we should make another income account for everything that we sell, good or service that we sell. Again, you're going to get too many income accounts if you do that. And again, we can usually get subledger reports that will break out by item if we're using the proper forms, invoices and sales receipts, and we're using the proper items that we're setting up. So we'll talk more about that later. For this time, we'll get to the customer. So let's go to the first tab then. Let's go to the reports and close up the ham boogie. And let's scroll on down who owes you. So the sales and customers. So when I look at this category, sales and customers, I'm typically thinking, well, sales is like another term for revenue and customers are accounts receivable. So this one's a little confusing because you might say, well, customers, maybe I'm thinking about accounts receivable. But since it's coupled with sales, then I would think it's talking about the income statement. So I'm guessing just by that name, most of these reports have to do with breaking out the income with further detail. How could you break out income by further detail? Giving us the detail by of income or revenue by customer or by item, the things that we sell. So what do we have here? We've got the sales by customer type detail. So now we can have a sale if we have customer types. So we break out our customer into customer types, then we can have that breakout. Estimates and progress invoicing summary. So progress invoicing is kind of a specialty situation where you might have longer term contracts where we have a progress invoicing situation. So that's a specialty field. Typically, estimates are going to be estimates that we create before we actually invoice. They don't actually record anything on the income statement, but we need to track them. And then we got the customer contact list. So that's just a contact list of names. Income by customer summary. So here we go. So now we have the income by customer. So now we're breaking out in some way the income line items by who paid us if we have that information in the system. Sales by customer summary. Notice that these two are similar sounding, but I believe they have to be a little bit different, right? I think the difference is going to be that sometimes when we sell stuff to a customer, we might sell them services, in which case they don't have any real expense item related to it, or we might sell them goods, in which case they have a expense side, which is going to be cost of goods sold related to it. So we could break out the cost of goods sold, one of the expenses in essence by customer. And then we got the sale by customer detail. Similarly, we have the deposit detail. Now this is a balance sheet account. So most likely, it kind of ties out to the balance sheet, but you can see why it would be here in the sales area because most of our deposits hopefully are coming from customers ultimately. Then we have the estimate by customers. So the estimates forms, which you would only have in particular industries where you have estimates. Inventory valuation detail. So this is another balance sheet account that they kind of stuffed in here because inventory kind of deals with customers sometimes, although on the purchasing side, you can also see it dealing with vendors. So another inventory item. Product service list. This is just a list of the things that we sell. Sale by products. So we'll talk more about this later, but this is the other way that we can break out our income line item, not by who we sold it to, but by what we sold, goods and services. Sales by product detail, payment method list. So this is just a list of the methods of payments, cash, check, credit card that we receive payments from. Physical inventory, once again, the inventory information, time activity, transaction list by customer, giving us all the transactions by customer, transaction list by tag. Tags are a specialty kind of component item. So our focus here is going to be by the income by customer. So let's open that one up. And then we got the income, and then we got the sales by customer. Let's open that up. And then let's also open up the income by customer detail and check those three out. So we can kind of call these similarly subledger accounts as we did when we looked at the balance sheet where we said that we have the accounts receivable, you will recall. And if I go into the accounts receivable, then you have what we could call a general ledger account, GL report, which QuickBooks calls a transaction report breaking out by date. If I go back, we also want this information by who owes us the money. So that's when you would need a subledger report. Now it's a little more confusing over here. That's from a textbook standpoint. If I go to the income statement, notice we have multiple income accounts. Now you might not always have multiple income accounts. You might only have one because you basically do one thing, but we have a similar kind of concept. If I go into any of these income accounts, it's going to give us the detail, which we can call a general ledger type or GL type of account, which they call a transaction report, breaking out the information that created this report by date, where we can see the forms. The forms are always going to go up generally when we're talking about sales or revenue accounts, and they're going to go up with invoices and sales receipts unless we have the weird circumstance or the more simplified system where they go up with deposits. But if I look at the income in total, collapsing this is my revenue or income line in total, I can break that out by subcategory or a subledger by either customer, income by customer, or income by item, what we sell, goods and services. So that means that the subledger report should tie out to these line items. Now, just want to point out that when we looked at the accounts receivable, it did tie out exactly. The subledger breaking out by customer ties out exactly to the accounts receivable by customer. QuickBooks forces that to happen because it forces us every time we hit accounts receivable to enter a customer. Won't let us record otherwise. Not that is not the case with the profit and loss report. Therefore, the subledger breaking out the income by customer or by product or service should tie out to total income, but may not, depending on our accounting system. So if we used, for example, if I went up here and we always used an invoice form or a sales receipt form and added a customer on all those forms, which we may not be required to do, then the subledgers would tie in to the income reports. But if I don't add a customer to these forms, or I use a bank deposit form, which doesn't work the same way tracking information by customer, the subledger will not tie out. If I record anything to income with a journal entry, then the subledger will not tie out, right? So that's going to be the general idea. So if I go over here and we run this for, let's say, let's go to 2024. So I'm going to run this 2024 01/01/24 to 12/31/24. Close the ham boogie. Notice we have a time range this time because it's an income statement type of report. Therefore, it's a timing report. Therefore, the beginning date matters because this report is basically saying how far did we go? Analogy to the car. How far did we drive in a day? How much revenue did we make in this year, now breaking out by customer. So here we've got the sale by customer. Here's all of the customers that we have that have outstanding balances. Here's the total, 585274. That should tie out to the total profit and loss in all income accounts, 5773. Doesn't exactly, because there are things that can be recorded that don't have a customer tied to them. So that's the general idea. So let's go back on over and say, I went to this one. Now this is, note that this report's also kind of cool that you can imagine quite easily that you would want a visual of this report, possibly like a pie chart, breaking out all of the customers and who owes you. Pie chart would be really easy to make, and we'll possibly make one later by just exporting to Excel and just generating a pie chart. So we might take a look at that later. Let's go to this tab. Close up the ham boogie, same range. Let's go from 01/01/24 to let's go to 12/31/24 and run it. So now you have the same income line, but also expenses. And that's if, so note on the income statement, normally you don't assign expenses to customers, right? We don't have an expense, but you can imagine you could, because you might have a system where you're paying for the expense and possibly making it billable, meaning you might then make it billable and include it as something that you've invoiced to the customer. So that's one way you can kind of think of it. Or you might sell like inventory, in which case you can track the inventory that was sold by customer because you can tie that to the sales forms, which would be the sales receipts and the invoices. So this report will give you, the expense line items that are tied to the customer. It's not going to tie out to total expenses because most expenses do not tie out to any income line item. They're going to be general expenses that we needed to expend in order to generate revenue, but we don't know who to allocate them to in terms of exact customer. And then we have this one. Let's run this one from 01/01/24 to 12/31/24. Run it to refresh it. And so now we've got the sales by customer detail. So now we've got each of the customers and the detail for each of these customers. I don't think it's going to give us a total. It does give us a total. Yeah, it does. That makes sense for that time frame. So that's kind of neat. Note that this information you can kind of get internally. So because you can kind of see internally each customer. If I wanted to see the activity for that customer, I might go to the first tab and go into the ham boogie and then go down to the sales. And then we could go to like all transactions and sort this information by the sales items like inventory and then sales receipts and so on. or we can go to the open invoices, which are the invoices that have not been paid, or we can go to the customers. And this gives me the summary, but if I want the detail on any given customer, I can go into the customer and I can see this detailed information of the payments and the invoices. But this report's kind of nice that it gives it to us for a certain time period. Gives us the invoices, at least the increases, the sales for a certain time period. Sales and invoices and sales receipts. I don't think a deposit form would go on here because I don't think QuickBooks sees the deposit form as an income type form, although it could be used as such in a simplified kind of system. So that's going to be the general idea for the income. Man, that took forever. That took forever, but it's finally done. Wait a second. It took forever? It took forever all time, and now it's finally done? What are we living? Are we living past time? We're living beyond time now? How's it possible that it took forever, but now it's done? That's like saying you were counting until infinity, and then you actually got there. You actually got to like infinity. Like what would be the last number if you counted to infinity? No, it can't be infinity. Infinity's not a number. It's a concept. What would be the number before infinity? Just before infinity, if you, whatever.